Hi guys. So in this video you will understand basic things on SAP RAR. That is, what is SAP RAR, what was there before SAP RAR, so why it came into the picture, and what is the IFRS 15 5-step framework and flow from SD to RAR, RAR to FI. Okay. Now let's look into the what is the SAP RAR. Okay. And target audience for this video is SAP SD and FICO consultant, or if anybody is interested also can see who want to know SAP RAR. So now what is a SAP RAR? See, SAP RAR is one of the new module which is introduced by SAP to meet the IFRS 15 5-step framework. Okay, that is the single one step answer. Okay. Now, if it is replica of or equivalent of SAP IFRS 15, what was the problem before IFRS 15? So, if we know the problem before IFRS 15, then we'll get to know what is IFRS 15. Okay, let's see. See here, before IFRS 15, what was happening? So, if there is any contract with the customer, so let's example take a internet service with customer for 3 months, so it can be 3 months, 6 months, 1 year, okay, anything. So for example, let's take customer service or internet, company has to provide internet service to the customer for 1 year. An example, January 2026 to December 2026. So usually what happen in internet service, so you take in India, so what happen, we will pay upfront 12 months amount. Okay. So if you are taking the first time, or if you are taking monthly also, we will be having packages. If you pay for a year, you will get some discount. So what happen, you will pay initially only. So company also what will do, they will show in the, I mean they were showing in the books. So they received a revenue in January itself. I mean they were ignoring that February, March are remaining all months revenue. That means they were showing in the books whatever the revenue. If it is a 1,000 rupees, it is if it is a 10,000 rupees or whatever amount they were showing in January itself. Due to that, what was happening? The major problem is, see, they will book the revenue, complete revenue in January itself. What about February, March, April, everything? The revenue will be showing zero for the respective contract. So in case mid of the contract, suppose March, April, customer, is not satisfied with the internet service which is providing by the company, so he might cancel. In that case, company has to repay the amount. Then what will happen in company books? It will be loss. So if it is a one contract, if it is 1,000 or 2,000, anything, it's fine. So if the companies are doing contract this way and they are booking only revenue at the beginning of the contract, it will show huge revenue irregularities. So because of it, International Accounting Standards introduced the IFRS 15 5-step framework. So for that 5-step framework, SAP has given SAP RAR. Okay. Now let's deep dive. What is the IFRS 15 5-step framework? See, step one in IFRS framework is identify the contract with the customer. So what does that mean? See, whenever you are dealing anything with customer, so you should have clear contract which has monetary which has monetary value within it. So if there is no monetary value or monetary benefit in that contract, then that contract will not come into the IFRS 15 5-step framework. Okay. In our example, we are taking the internet service for 3 months. Okay. That is a step one. Next, step two. So see, if you take the SD rate, basic SD, when you are creating any sales order, if you're selling anything to the customer, you will be having items in that. So those items we call it as a performance obligations in RAR, or as per the IFRS 15. So in our contract, we have two performance obligation. One is a device or modem. Next is internet service for 3 months. So these are the performance obligations, okay, which are within the contract. We have to identify. Now, step 3. We have to determine the transaction price of the each POB and also total transaction price. Okay, total transaction price. So if we take in our contract, the device transaction price is 100 rupees. See, you may get a doubt, what is this 100? It is nothing but a item price which we will maintain your sales and distribution. Okay. And for service, transaction price is 900. Then total transaction price for this contract is 1000 rupees. Okay. Next, step 4. Allocate the transaction price. So please carefully listen this. If you don't understand, go again and visit once again. I mean, watch this video again. So this is the one of the important step in SAP IFRS. I mean, SAP RAR or IFRS 15 framework. So if you understand the allocate the transaction price to POBs, then you understand the 50% of SAP RAR. Okay. So for allocating the transaction price, you need a few things. Okay, one is the transaction price you need, and SSP, that is nothing but a standalone selling price. You already seen the transaction price in step 3, which is nothing but a coming from SD. And what about standalone selling price? Say this is standalone selling price is nothing but whenever you are selling this item or POB individually, what is the price you are going to charge for customer? Suppose if you are giving only device to the customer, how much you will charge? If you are providing only service to the customer, how much you will charge? So in our case, device SSP is 500 rupees, service for 3 months is 800 rupees. So total total SSP is 1300. Okay. Same way, this is the total transaction price. Okay. So now before calculating the allocation amount, we have to calculate the allocation percentage. The formula for allocation percentage is POB SSP or item SSP divided by total SSP. In our case, for device, SSP is 500 and total SSP is 1300. So we are getting this percentage 0.384. Okay. If you want to do, you can do it into 100 also, but that's not required. Okay. Service for 3 months. Individual SSP is 800 and total SSP is 1300. The percentage is 0.615. Then how we will calculate allocation amount is allocation percentage into total transaction price. So allocation percentage for device is 0.384, right? Then total transaction price 1000 rupees equal to 384.61 rupees. The same way is calculated for service. The percentage is 0.615 into total transaction price 1000 rupees equal to 61.38. So allocated amount always will be equal to your transaction price. It is always equal to this transaction price. Okay. This is the important one. Try to watch once again if you don't understand. Okay. Next, recognize the revenue. This is the step 5, which is the last step. Recognize revenue when POB is satisfied. Okay. So what does that mean? See what is happening. Device. We are giving the device to the customer. So once the device is given to the customer, then nothing is there to do for the device, correct? So that is for device. When it comes to service, service is not going to end when you I mean after you saying to the customer. So it's not something, if you say, okay, I will provide service for 3 months, then it's done. So it is something that next 3 months you have to provide services to the customer. Okay. So if you see here, we are telling that recognize revenue when POB is satisfied. Okay. For that, what is happening in SAP or what IFRS 15 tells, you have to define each POB wise fulfillment type. Fulfillment type. That means what is this fulfillment type? Whether it is a event based or whether it is a time based. Okay. So if you take for device, it's a event based. So what is that event? It's a goods issue. Event is goods issue. Okay. When it comes to the time based, it's a each month, or it's a, up to you whether you want to define each month or daily. It's the settings, like how we have depreciation in asset accounting, right? Whether you want to calculate day wise or month wise, same way, whether you want each month or day wise, we can define. Okay. Now, whenever this event happens, so that time only we have to recognize revenue. So for device, after goods issue, will recognize the revenue. Okay. When it comes to the service, each month will recognize the revenue. Okay. Now, if we see, our contract is spanning over the 3 months. So how much revenue we have to recognize each month, we'll see. Okay. When it comes to the first month, okay, first month revenue to be recognized for devices 384. That means which is a complete allocation amount we are recognizing. Why? Because our event is goods issue. Whenever if goods issue happens in first month, then we are going to recognize 384 first month. So as we are recognizing first month 384 itself, there will not be no recognition for device for next 2 months. Now, when it comes to the service, because it's a time based, and we have a 3 months. So what we are going to do? We are going to do allocate amount, which is a here, divided by total months. So for us, 361 3.58 divided by 3 will become 20512. So which is first month 20512, second month 20512, and third month 20512. So if you see end of the first month, it will be revenue recognition 589. End of second month 784, like 589.73 plus 20512. Then by third of month 789 794.85 plus 205. So equal to 1000 rupees. See, this is the IFRS 5-step framework. If you see, we are recognizing revenue whenever POB is satisfied. Okay. Otherwise, before IFRS 15, what was happening in first month itself, complete revenue was getting recognized. Okay. This is the 5-step frame, 5 IFRS 15 5-step framework. Okay. Now next slide, we'll see what is flow, how is flow from SD to RAR, then RAR to FI. Okay. If you see in SD, first we'll create a sale order contract either in VA01 or VA41. Then this sale order will transfer to the RAR. In RAR, same whatever sales order item we had, we call it as a raw item, revenue accounting item. Okay. Then from this revenue account, contract will be created. So contract will be created. Then for this contract, we are going to perform the month end process. Okay. Month end process. When you process the month end, right, then automatically the revenue will get posted to FI. So here if you see delivery also and billing also, whenever you perform against this sales order, this will be transferred to the RI item, then same will be updated contract, then as part of month end process, revenue will be recognized. So even this billing and delivery also will be updated in FI documents. So this is the flow. This is just a high level flow. So how is there from SD contract is there? Contract will come to RAR, then RAR will process and create a contract. Then as per the performance obligation satisfaction, then it will transfer revenue to the FI. So this is just high level guys, and I am providing the RAR training as well and RAR support and interview support, anything if you guys require. So if anybody want contact me, or if you anybody want any support or RAR training, you can contact on this number. If I'm not reachable over the phone, you can just WhatsApp me as well, or you can just send a mail also. Okay, and I will be updating the RAR videos, few RAR videos in this YouTube channel. I mean, any issues and few concepts. So if you want full RAR training, you can reach on this number. So I'm giving the real-time training, and also I will be explaining you one end-to-end implementation project. And one of the most important thing in SAP RAR, most consultant will not understand is accounting entries in RAR. So I will explain you accounting entries very clearly, and also I will explain you migration process or cutover activities. So this is the place where most of the consultants struggle. Okay, and also one more thing, in my RAR training, I will show you. I mean, I will give training in latest 2025 S4 HANA version, and also I will explain you what are the changes in latest 2025 S4 HANA version for RAR, and I will show you two different things. One is inbound processing and classic inbound processing. I mean optimized inbound processing and classic inbound processing. The same way differences between optimized contract management versus classic contract management. So there are a lot of changes because few people think that RER is same in 2020 and same in 2025. It is not the case. There are so many changes in 2025. If you want to join the training, just let me know or call me on this number, or send mail on this mail ID. Okay. Thank you guys. Thank you very much for watching.